Level 1, negative balance. A $4 overdraft turns into a $35 fee. Before you can breathe, a forgotten $7 subscription hits an already negative account and triggers a second $35 penalty. You call the bank. A scripted voice tells you fees can't be reversed, promises a call back within 48 hours that never comes. The fallout compounds. A failed rent payment brings a $75 late fee. A bounce phone bill adds $25. What started as a $4 mistake is now $200 deep. You start skipping meals quietly, performing fine in front of coworkers. At the branch, the teller's expression shifts, not anger, not pity, something colder. You stop feeling like a customer and start feeling like a flag, a risk score. You leave without saying what you came to say. Level 2, $200. You claw the account positive through 20 hours of overtime. No one notices, except the bank, which quietly withdraws $1.12. 15 maintenance fee anyway, since you're nowhere near the $1,500 minimum to avoid it. You apply for credit and get offered a secured card. Put down $300 of your own money so they can lend it back to you at 24% interest. You decline, and then your tire blows and you have no way to cover it, riding the bus 3 hours late to work while your manager just stares a little longer than usual. At the branch, you watch the teller's warmth toward the customer ahead of you vanish the instant it's your turn. Process in 40 seconds, no pleasantries, no acknowledgement. You realize the bank doesn't dislike you at $200. It simply doesn't see you at all. You exist in their records, not in their attention. Level 3, $2,000. Something changes, not in you, but in how the system reads you. 6 months of steady $1,600 bi-weekly deposits earns an automatic fee waiver you didn't even request. Suddenly, real credit card offers arrive unprompted. Actual $2,000 limits, no collateral required. From the same institution that rejected you months earlier. You're approved for a card in 90 seconds and a $5,000 loan in 48 hours at 11%. At the branch, the teller now greets you before you reach the counter. Not warm, but no longer cold either. You realize the bank was never evaluating your character, only your numbers. At $2,000, your account finally looks like something worth selling to. You're not invisible anymore, but you're not respected. You're profitable. Level 4, $15,000. Your credit limit silently jumps from $4,000 to $9,500 without you asking. A real person, an assigned relationship banker, calls to introduce himself, asks about your goals and savings, offers a direct line. A car loan that would have cost 11% at $2,000 now costs 6.8%. A $32 fee gets reversed within hours over a simple email, no script, no hold music. The bank's cruelty was never personal. It was indifference, and at this tier, that indifference finally starts working in your favor. You understand now. You're not being invested in. You're being invested for. Level 5, $80,000. You're now a preferred client, a label stamped across your statements and login screen. Your banker, David, remembers personal details you mentioned once, 9 months ago, a sister in Chicago, and emails you unprompted on your birthday. At the branch, someone with a nameplate in office walks you past a line everyone else still waits in, the same line you used to stand in without realizing it existed. A pre-approval letter for a $400,000 mortgage arrives before you've even considered buying a house. When a competing bank tries to poach you with better rates, David counters within the hour. You're not just retained anymore, you're defended. Level 6, $500,000. The bank stops being somewhere you go. It starts coming to you. David no longer emails. He calls, this time to introduce a wealth management colleague who drives to your office with leather folder printed reports and spends 90 minutes discussing your goals, taxes, and estate plans without ever pitching a product. You realize the selling already happened. You just weren't shown it. A frozen wire transfer gets fixed in a single phone call. No transfers, no scripts. You're invited to a private dinner with 7 other clients where money is never once mentioned directly. It's a table, not the topic. You're no longer a customer. You're an asset the bank protects. Level 7, $5 million. This is private banking, not wealth management. A relationship, not a service. And relationships negotiate rules rather than follow them. Your private banker manages fewer than 20 accounts, yours among them, and knows details about your family and unspoken plans. Your mortgage rate isn't published. It's negotiated. Paperwork that takes weeks for others is resolved in 48 hours because someone flagged whose account it is. Walking into a branch you've never visited, staff already know your name. You're shown into an unmarked conference room for a private investment deal that exists on no public prospectus, a room that only opens because your relationship justifies it. The bank doesn't just bend the rules here. It rewrites them around you. Level 8, $25 million. You no longer have a banker. You have a relationship, one significant enough to appear as a named line item in someone's performance review. People's careers are quietly tied to keeping you. Deals aren't offered from a menu. They're written as sentences for you alone. Loan terms are settled over a single phone call. Investment structures built around your timeline before you've agreed to anything. Opportunities are brought to you before they're publicly available. More than access, you now have influence. The chief investment officer solicits your read on emerging markets. The head of private banking asks what your peers should expect next. You become a partner shaping the very institution that once charged you $35 for being $4 short. Somewhere right now, someone else is staring at a minus sign on their screen, a $4 coffee charge they forgot about, a $35 fee already deducted, a scripted voice on the phone telling them nothing can be reversed. They don't yet know the system isn't malfunctioning. It's functioning exactly as designed. The same institution that will one day fly an executive out to ask their opinion on emerging markets is, right now, penalizing them for not having enough. The piece closes on its central thesis. You are the same person at every balance. The bank doesn't change who it is at each tier. It simply reveals, through its treatment of you, what was all along.